Good morning, guys. Afternoon. Coughings. Ugh. What's up, guys? Feel better? Shorting what? Oh, I'm still sick. Shorting something? No, I don't think so. Sold calls on things. Give us your SPX prediction for FOMC today. What do you mean, what happens after FOMC? I have no idea. I don't know what they're going to do. I told everybody we were going to go up from open. We did that. It's AVGO bouncing on VWAP. It's below VWAP, but it's got support at like 180, 250. Worthless. You could have bought calls at open. I feel like owning them at any other point in the day wouldn't have made a lot of money. Was it a V from 65 to 75? You mean when we hit 60? A little bit. 65. Oh, here? Sure. I think it was a lower high, though. You gotta work on that immune system. I take allergy medications that suppress my immune system. What work do you suggest I do? Guess what I did yesterday? I don't know. Probably bought something shitty. GME? Too bad they don't better suppress your allergies. Yeah. But it's allergies all day, every day, or, sick once a month. I actually do eat pretty healthy. I don't really eat anything that bad. I'm getting exercise, but I eat pretty healthy. What are your thoughts on gold price action over the next month? Hmm. I would say it probably stays elevated because there's still a lot of risk inside currency spreads. You don't eat healthy, you eat once a day, but I eat healthy food once a day, usually. Hmm. Healthy or high quality? Usually pretty healthy and high quality. Trade while running on a treadmill. Gross. Mm. Can bulls slip here? Sure. Yeah, 70s. 70s still a pretty big resistance. It has been most of the day. I don't watch lunar tips. I'm not going to set them up either. I posted the Beyond ones in the Beyond chat earlier. Is Beyond expecting an up? Not that I'm aware of. It got a little bit of covering like a couple days ago, and everyone's been being weird about it. Well, nothing to watch when markets open. One resorts to cores. Gross. Did you know that the chap sends out a weekly newsletter of the week's economic scheduled publishings for a monthly fee? Genius. God, I suck at shilling. No great outcome today, at least in the longer term. Would a pause at least be short-term bearish due to sentiment? It depends on how effectively he could be dovish. Could goddamn Fubo get a little covering? It did before earnings. It looks like it's starting to build some support at 40, like 38, 45 again. This is its favorite range. Hmm. How are we feeling about upstart puts? I don't think so. Not yet, at least. Hmm. How are we feeling about QQQ puts? Hmm. Hmm. No, not yet. I mean, the Fed decision could change a lot of things, but I have really no interest in getting them right now. Also, everything's overpriced. Hmm. Sellers don't have any volume. I figured they would de-risk. Not before the Fed meeting. Also, we haven't even gotten to VN yet. Just got another event pass to sell more vol. Yeah. We're grinding to 6,000. We could. I don't know if we'd test 6K today, but we could get up to like 59.95. There's a ton of resistance there. And it'll be hard to hold those levels above VN. The Fed decision comes in at 2 o'clock. I don't think it's heading to the monthly VN. There's not a lot of options out there. What's up, Popcorn? Still in Reddit? Yeah, but I got a few weeks for my sold calls. I think we see 56.90 before 6,000. It'll depend on the Fed. I'm all out of protein bars, but I don't want to leave my desk for sustenance. Let's see. What's a WTI up 1% on 2.1 million barrel inventory builds? I mean, 2.1 million isn't a huge amount of inventory. I sincerely hope everyone is in a better place today. With that said, any thoughts on DJT going sub 25 by the end of the week? I have no idea. I don't pay attention to that stock ever. It's just a good way to lose money. Everyone who fucking plays it loses money on it. Yeah, I mean, it's definitely failing after its peak yesterday. Might bounce at some point. I don't know where the levels are on it. Well, let me see if we pull data for it or not. We do. Looks like it fell back below Gamma Max. Some of the Gamma fell off. A little bit of support at 35, which it failed. Yeah, not much support down here. 30? No. Short-dated interest. 30 and 25 are support, so it already failed 30, it looks like. Yeah, I don't see why I couldn't get to 25. Quadruple top? No, bulls are just grinding it. Stop trying to short this. It's really fucking stupid. Options are overpriced. I wouldn't touch the index today at all. You will more than likely lose all the money you put into it. I'm trying not to talk a lot because I'm gonna get hoarse. How's Upstart looking for the coming year? Will the cycle be predictable? I mean, it's already not predictable. It's largely based on the assumption of loosening and tightening financial conditions. Um, but I mean, it's still pretty volatile. It's decent money. But there's no cycle anymore. There's the short interest that used to be there is long gone. You're already horse? Yeah. Haha. Why are yields cooling down? Because they rocketed yesterday? Also, there's probably some buyers on the currency side. Do you see any correlation between FOMC, BTC, MSTR? I just like hearing you think out loud. Mm, I don't think the FOMC meeting is going to encourage any additional risk on. So no, I don't think there is any. None of any relevance. Everyone support RFK's agenda. It doesn't matter who's president when you're on a legendary dose of mescaline. That's true. FTSE priced on it open after a few minutes. Took a long wait to get anything decent from them. The 60C was kind of a better play if you got it early enough. Hmm. Anxiety mean reverts. Goldman top trader on VIX Mageddon. Why are they calling it that? Because vol went down. It didn't even go down that much yet. It went from like 20 to 15. I'm gonna do so many drags. I know you are. Yeah, EPM's pretty spicy. I got bot calls out of the money at 75, 80. More at 80 though. Some at 90 for Friday. And the money sold puts like sub 60. So not too much put selling up here, which makes sense. Bot calls at 65, 70. Bot puts at 65 and 70. So a little disagreement there. Gamma's pretty flat to the upside to like 59, 59.80. So I don't see any reason they can't push this up towards VN, which is what I expected before the FOMC meeting. Above VN, it gets trickier, but they could keep pushing it. Hmm. Is there any outcome from FOMC that's better for IWM, or is it likely to get rugged regardless? Doesn't have a lot more room to the upside left. Let me think. So Powell cuts, rates rise. Dovish pause. Maybe a dovish pause, but I don't know if the market's gonna believe him. Like they might believe him today, right? But I don't think it's gonna last. Trump likely to let Powell serve out term until May 2026, CNN. Look at him. He's already breaking his promises. I mean, there isn't. Gamma Max is at 6,008. Depends on what time frame you're looking at, Poopy. Popcorn. Too many P's. The show goes on, dovish forever. I mean, it's fine. Rates will just continue to go up. Can the stream survive the obnoxiousness of the Trump daily news cycle? I don't know. How long have we been here? As long as Poopy. That's the time frame. So you've already had one crash, but you want a second. Redo, please. All right. What was the crash? The market went down like 30% in 2022. I wasn't trading the COVID one. I remember I bought puts at the bottom. I bought calls at the bottom. It was so long ago. No one remembers that. I know. La-di-da. I mean, do you remember you bought puts? So you bought puts on the pimento? I feel betrayed. No, I wasn't trading during the pimento. Wait, what? Did I miss the FOMC poll? No, I didn't do one. No, I bought calls and then puts when you posted the bear song in Feb 2023. That was also awesome. I think the problem here is just not closing the puts. I'm gonna ghost your AVGO play. I don't give a shit what you do. I don't recommend it though. It's risky. They're like 1 DTEs. Closing? Question mark. The great days of buying cat calls in the 170s. Yeah, should have gotten even more theta on them. Then banks failing meant bullish, and I never recovered since. But I thought you did recover. And then blew up again. Pimento? Like the pepper? Is this a financial thing? Yes. I think SPX closes down 4% today. That'd be cool. Oh man, that was funny. Banks failing, then we just went straight up till now. We'll probably keep going straight up until the banks actually fail. Pimentos, meatballs, Dorito of Doom. I'm hungry now. In an hour, will we be buying puts and regretting it or calls and regretting it? I don't know. Neither, because they're just overpriced. That's an option. Yields up, market up, banks up. Banks are down today, as are yields. JPM's down like 4% today. Everything's just getting pumped into tech. All that sweet, sweet leverage they picked up yesterday. Bank of England cut today, which frees up a little space for JPOW. Because the sterling's up like 84 points against the dollar. After just getting fucking wrecked by it yesterday. Minutes are out at 2. I should say Bank of England was expected to cut anyway. There was a very slim chance they didn't, but they did, and that does soften up the dollar a little bit. It's one of the reasons we're seeing yields at the top end fall back. However, that retreat in those yields is probably short-lived. My putsies are way downsies, but my calls are way more upper than putsies downsies. Should I close the whole thing a winner and walk away from the Fed meeting? I mean, have you looked at the price of options today? It's fucking ridiculous. There's just a little liquidity on the SPX 5000P 0 DTEs. Oh man. I'm sure you could get a fill if you offered to buy them. I don't think we get a dot plot this month. We get a dot plot in December, but not now. No dot plot. We got a dot plot at the September meeting. No, we're not closing at SPX 5000. Jesus Christ. At best, to the downside, like 58.50, and JPOD really have to fucking fumble the ball to get us there in, like, an hour and a half. I bought 100 AVGO calls by accident. Cool. No, you didn't. Well, at least not this call. Yep. Not that call. Would you stop getting rejected at 85 and just blow out the sold calls already? What do you think of AMD after the last drop? How much more room can this run up to? Is 155 possible? Yeah. Yeah, 155 or 160 is probably not too far off the table. I know AMD fell pretty far below DN. So I would say as high as like 155 or 160 is not out of the question. There's a lot of resistance to the upside though. Maybe it'll pull back. It's just breaking over like gamma neutral, delta neutral today. 148. Yeah. It's just starting to get over DNGN. They're both around 147. So I would say, yeah, gamma's going to start to turn a little bit more positive. It could run up the chain. It's going to have to squeeze some shit out, but it could get there. Secret top is SPX 6000. Interesting. Well, 59.90. I mean, a secret, is it? Not really. No. Hmm. Still remember the time you accidentally bought 100 cat calls instead of 10, and it immediately paid off? That was fun. Happy accident. Those are good times. Made a lot of money on that run on cat. Largely because I bought 10 times the amount of options I was planning. Prediction for gold from here is this uptrend set to continue into the short midterm. I think as long as dollar risk stays elevated, the price of gold likely will as well. Cuts here today could cement another leg up. If inflation rises, those cuts are going to become far more significant. QQQ goes up all the gains from earnings, down $20 after earnings highs. Huh. Thoughts on what the Trump administration will do to the dollar? Probably push it to the moon. I mean, I assume that inflation is only going to get worse, especially if he tries to enact any tariffs. Way, way worse. And he's probably going to push for cuts. What's free money? No one played cat in this run up. You mean yesterday's insane move upward overnight? No. The only thing I had for that was straddles on SPX for the election outcome. Corporate tax cuts, inverse of Harris. Thoughts are options analysis on Reddit. It's pushing up to its secondary gamma max right now. We'll probably see like a vol crunch once it gets closer to the top of the range. They're still selling a lot of vol on it, but they're also rolling up their short vol from the lower part of the chain, so that has a bit of a bullish effect. It can make it really choppy in here until the out of the money gamma trims down, and then the price will probably fall. I'd never entered Netflix. It never hit my target. No cut on Reddit. I've just been selling calls on it. Like 30, 45 DT. Most of them are sold at 25. This was quoted from the EIA report. Alright. Doesn't seem to be having a detrimental effect on oil prices. Is what happened yesterday good for the market or no? I mean, no. Everybody risking off bonds and piling into equities is probably a bad thing given where the risk is in our banking system. It pushes banks a lot closer to having to mark to market securities at a loss. If Trump gets rid of income tax, that would be absolutely insane. Yeah, it would be, because our government would have any money to function. And given that he spent more money than like any president in the last 25 years, I don't think he would like that very much. How much did you make on your straddle yesterday? It was like 47%. What are your thoughts on going long TJT? If you plug your nose while looking at the financials and base it on the fact that the majority holder will be president, Trump will liquidate all of his holdings when he goes into office. Most likely. Or he'll pass it off to like a subsidiary or someone in his family. But I mean, their balance sheet is absolute fucking garbage. They don't make any money. Nobody uses it. Did Trump spend more than Biden? Mm, well, Biden's not done yet, but yes. According to the Federal Budget Committee, Trump approved 8.4 trillion in 10-year borrowing during his term in office, and so far Biden has approved 4.3 trillion, which is 6.2 trillion gross and a 1.9 trillion deficit reduction. How much of that was COVID related? Like 3.6. Why are we still saying those names? Banhammer? Well, because we're talking about budgets and US debt. Things that actually pertain to the market. Playing devil's advocate here, but would it not be a way for people who want to curry favors from the president to throw money at it? I mean, he owns like 50 private companies that they could do that with already. Why would they want to do it with a public company where the paper trail is far more obvious to regulators? I'll put my bludgeon away. Thanks. Isn't spending more money good for pores? No. I understand delta and theta, but could you explain gamma as far as the decimal point value? Gamma is the rate of change of delta. Don't you think the market maker wants everyone long? I don't think they give a shit. They're the market maker. But if we go above 59.77, they're going to be net short or net long puts. Dude, chill. DJT had a full entire $1 million of revenue in quarter three. To the moon, bro. No. Like all of Trump's endeavors, it's another fraudulent company. Displayed to. There you go. Trump should let RC run it. Oh, Jesus. Gherkin, when do you think we're back in a fun environment for convertible bonds? Ooh. Hmm. We probably got a while to go. Maybe. Hmm. If the Fed continues on the current trajectory, we could get pretty interesting like 6 to 8 months from now. First half next year. I'm thinking more like mid next year, second half next year. Today's decision will play a lot into that. If J-Pow pauses, it's going to be a big deal. I don't think he will. I think he'll cut, which is also a big deal. But your thoughts on software companies like Twilio? Mm, like what? I was long Twilio a while back, but I got out around like 65-ish, I think. 62, actually. Like back in, fuck, what was it? June or July? Something like that. Their profits have been good. Earnings have been solid. I don't think they're a bad company, but I think they've priced up pretty hard already, and more so after the most recent earnings and their bumping guidance. Do you have any PFIX like instruments or convertible bonds? I could do some digging. What's up, Rhino? It goes, took a need to renovate my house for a couple months. Comforting to know you're in the same spot. Mr. Reliable. Can I read up on your market expectations with your new overlord? EPM on point. Um I mean, Trump is likely to just reignite inflation really hard, which is going to tighten financial conditions on the other end of the spectrum as dollar ramps up. But we'll see. We'll see what he plans on what he actually implements versus what he says he's going to implement. Promising to keep J-Pow on until 2026 is an interesting choice. SoFi calls like underpriced. Shouldn't they pump on a cut? You know, I've actually been looking at SoFi the last couple of days. I don't know. I don't know how much a cut actually benefits them, but maybe. The breakout's kind of interesting, and they've been lagging a lot behind the rest of fintech, so it's got some potential. It is right at Gamma Max though already, and there's not a ton of out of the money interest except like 15. Hmm. Yeah, that's kind of problematic. chain only goes up to like 22. I'm on the 4 hour, like, so bearish. I mean, it's way overbought, right? So I would say, yeah, it's probably getting near a high here. I would be cautious though. I mean, it really needs to break back under like 35 solidly. And then yeah, maybe fill the gap. So I'm actually not long Upstart, but I am long Affirm. Upstart just didn't look like it had as much range. Unhedged. Yeah. Just the volume. Yeah, the volume's starting to die off. Hmm. Is 8,750 a reasonable price for a new oil boiler and a 55-gallon tank? I have no idea. How long can a stock trade above Gamma Max like Tesla before the price movement or data adjusts? um, Usually GM will quickly catch up to spot as long as people reposition. But I mean, remember Gamma Max is there because that's kind of where the majority of like sold call positions are, and if they're not closing or rolling up, then mean reversion becomes more and more likely. It really depends on how much theta's on the positions that have moved from, out of the money sold to in the money sold. But generally, repositioning is pretty quick on a big move up like that if people are bullish. Do you still own the Long Island house? Yeah. GM went down slightly. That's kind of interesting. I mean, where is it saying Gamma Max is 77? I'd say Gamma Max today is probably closer to 290. Given positioning that's come in. But it may take like another day to catch up. So we'll probably see GM move up tonight. The problem there is there's not a lot of open interest between like 280 and 300. The chain's really thin, and so Gamma Max is a bit below where spot has moved to. But that can also just be buying in the underlying or like ETF buying due to the increased market cap weighting. And so sometimes it'll take like a day for that to readjust after you blow through Gamma Max super fucking hard. Afraid to sell what? The house? I'm not afraid to sell it. I want to sell it. It's not exactly an easy house to find a buyer on. I buy the house for 251K. Yeah, if you do a down payment of 3.1 million, we could talk. Why did Lunar go up today? I have no idea. I think they have earnings tomorrow. Or Monday? Earnings are on Monday. No, not 3.1 million yen. Poopy. Have you tried taking off your shirt during the sales pitch? I have some like lady who's selling it. She's found a couple buyers, but I don't want to let it go for like everyone's trying to save money on it because the taxes are so high. It is annoying. And then I put like money into getting like nat gas and everything, so did you negotiate the commission rate? Yeah, it's 2.5%. Also private buyer, which is nice. So I don't have to like list it publicly. Ideally, I get to finance it. Ooh, nice. Not getting docs today. Yep. Yeah, Lunar still looks pretty good. This was like a Pickles pick, like for zero DTs a few weeks ago. They've been doing a little bit better on margins and earnings lately. They might keep going up. I mean, kind of squeezy because of the big short positions. So any decent repricing might get shorted back down, but maybe over time they continue to improve. The problem is that the company itself is it's kind of bullshit, right? They make like space exploration and infrastructure stuff, which is nonsense. So you just got to hope a bunch of venture capital gets funneled their way so they can keep doing nonsense at a higher multiple. What about a rent-to-own situation in my firstborn? First of all, I'm not Rumpelstiltskin. I don't want your child. Secondly, no. And I still didn't increase the price, and more importantly, the commission. And it's amazing how many buyers I had interested after that. She talked herself up to 2.5%. I offered 2%. You can go full slumlord. It's a fucking like $3.5 million like micro mansion. I'm not gonna be able to rent it to anybody in a slumlord type of scenario. Now, if I take that money and use it to buy brownstones in Harlem, totally different story. There are financially desperate millionaires. I'm bored. Yeah, same. Ooh, testing 60s almost bearish. I just want to get rid of the fucking thing. I don't want to pay another year of taxes on it. Like I had to hold it for the cap gains period, but now I can get rid of it. So I'd like to while it's still worth way more than it should be. Why don't you buy something in a non-flood and hurricane-prone area? Hmm, like North Carolina, like inland North Carolina. How's an agent supposed to attract people if it's not listed publicly? She has clients. You rang. Like the Midwest. We could be neighbors. Ugh. Is there anywhere to live in the Midwest that's not just egregiously awful? No. You just have to like be near a university. That's the best you can do. I'm not living in fucking Chicago. Is a 0.25 cut bullish? No. But could it be today? Sure. Knowing you, you'll probably sell the house at the top. I'm running out of time for that. You guys live with my cousins in the scenic Gary, Indiana region. You mean the shittiest part of Chicago? I feel like when you're home shopping in the Midwest, you just have to look at like the number of bachelor's degrees in the area. Did the agent want to list it publicly? No. She pretty much exclusively deals with private sales. She's already gotten a couple offers. I just turned them down. One guy offered me actually over my asking price, but he wanted 4.5% financing, which I wasn't gonna do. Not a penny under MSRP. Gotta make sure they got skin in the game. No, she's done a good job. She comes highly recommended, so. What are you offering? 5.25. Right now. It was 5, but now it's 5.25. I'd do 4 point. I'd probably do 4.5 over 15 years, but not 30. I mean, I assume they're just going to refinance at some point anyway. But it's slightly better than getting the cash and putting it all in treasuries. And 5.5 in 30 minutes when JPOW drops rates. Well, like next month after rates go back up even higher. I mean, 5.25 is pretty nice right now. I bet that guy comes back. Well, he hasn't retracted his offer yet. He is still deliberating. So he may. Like that guy specifically might buy it, which would be cool, but I'll probably have to miss a day of the stream for closing if that happens. 30-year fix is 6.9% average right now. I know. Stream it. Kind of defeats the whole purpose. No, we're not throwing a pickle party there. I don't want to own it though. I mean, in 20 years, it's just going to be part of the Long Island Sound anyway. Has the friend who lost the house ever mentioned it again? He tried to like really awkwardly turn it into like a gift kind of thing in front of his wife shortly after he lost it at a dinner party. But I haven't talked to him in like 3 months. No, the stream's not dead. Are you? Quick, Bob. They're coming for your guns. Did he want you to claim it as a gift? I have no idea. I didn't. His kid, and yes, his kid is evil. With the way we trade zero DTs, how is it beneficial to trade them over futures? You get more leverage. There's more opportunity to take advantage of mispricing in the options market than there is on futures, which is extraordinarily liquid. It wasn't a gift, though. It was a foreclosure. Well, essentially, yeah. How much of a poor am I that I can't even wrap my head around financing someone's purchase of anything? Huh. Well, I mean, like, if I got the cash tomorrow for the house, I would just put it in treasuries, right? And probably like 20 or 30 year. So if I can get a better rate than the 20 or 30 year for 20 or 30 years, I'd rather do that. And then just collect the interest on it, right? Guns are safe, thank God. You're gonna need those for the storm. Kurt just realized another level of how poor we are. Oh no. Maybe Geo's going down again. What a piece of shit. Why is it having such a hard time with that? The resistance at 85 is not even that strong. I just realized that this is the end of year higher high push to 6K we were talking about a couple weeks ago. Maybe I could go a bit higher from here, but the next pullback's likely going to be the big one. The next pullback's likely to be bigger because there's no positioning between fucking 5,800 and here, which is a big gap, right? It's just like not that much in the money. So once the short calls that got driven in the money fall off, there's not going to be any support for this. And we're in kind of the same situation. They're not buying anything out of the money again, right? It's Delta's really thin to the upside. Probably because we ghosted you. Probably. Fuckers. Support on AVGO is at 82. And the upside is 93. Can I get it by tomorrow, though? Or should I just wait for the Fed meeting because their options are super cheap? Hmm. Consolidation still slightly bullish. I mean, longer dated puts are getting more attractive, but there's still some trimming in vol I'd like to see. 3 month volatility expectations didn't shift much. Just What's sepia filter, Gherkin? I don't know. Ooh, I'm gonna go get tasty food somewhere tonight. But where? Hmm. I'm just gonna say it. Lamb tastes weird. Really? Hmm. It shouldn't. Where are you getting your lamb from? No, not much better. Are you eating mutton? Mutton's gross. I think you got me sick. Probably. Hmm. Have you ever been to Monteverde in Cortland? Is that what you're talking about? In Chicago? No. You should know a lot about upstate New York. I've been to weddings at that place like 4 times. 10 minutes until the market crash. It's the perfect time for pumpies. Seven minutes. You're just seeing how yields react. Yep. Mm. If there's no positioning up here, how can we grind to 6,000? There's not a lot. There's some. And more positioning can come in. Just because it's not there currently doesn't mean it's never going to be there. Three more minutes. Probably a 25-point cut coming, yeah. Seems very likely. The most important question is what color tie? You know what? You're not wrong. What if he switches to red because Trump's keeping him in office? Yeah, that. What if no tie, two buttons open? Oh, then SPX is going to 4,500. Little bottle of airplane whiskey sticking out of his shirt pocket. Jesus. 25. Nice. Yep. 4.75. Committee judges risk to employment and inflation goals are roughly in balance. Amidst reference, we have gained greater confidence, and they've removed the reference to inflation moving sustainably towards 2%. Labor market conditions have generally eased. Unemployment has moved up but remains low. Economic activity is continuing to expand at a solid pace. The Fed will continue to reduce bond holdings at the previously announced pace. Let's see what yields are doing here. Ooh, yields are starting to push up. Oh, 57.50. We're probably not going to move much until the presser. What's new, Scooby Doo? Nothing, Shaggy. This is the first 2024 FOMC without a big green candle at 2 p.m. Yeah, yeah, it might be. Firm down. Didn't like the rate cut. It's above Gamma Max. I feel like all of these are pretty good reasons. Any positioning coming in? Mm, there's a little bit of positioning coming out like the 59.90, 6,000, but those may be sold calls. Hold on, I need to look at something else. Hmm, curious. The 80s, the 80 calls look bought. I think the 90s are being sold. Yeah. Still a lot of just neutral positioning at spot, though. The wait for Geronimo Powell is excruciating. Hmm. Well, we're probably not going to get a ton of movement until the presser, but I think we're pretty well set up to move either way. The downside's got a bit more liquidity. But support at 65 is solid. I'm trying to see what you see in AVGO, but can't. What do you mean? Wind down a Reno? Possibly after J-Pow opens his mouth. That's as good a time as any, I think. Who? Ridiculous. What do you mean? We specifically said no market crash. Dork. Well, he's not getting fired now. He's never felt safer. I expect the upside to be grindy. I don't really care about the positioning on AVGO as much as I care about the potential move in QQQ. Why would they cut if they're not gaining confidence on inflation? Because they're not gaining confidence on inflation. Since we have taken advantage of a bullish QQQ move off of the Powell speech, yes, and also cheaper than QQQ. And AVGO has range out to Gamma Max, which is at like 193, which it's not very far away from. And there's no real resistance to the upside. 85 is just like a bit of a hump, but if the index moves up hard, there's plenty of room.
CTD put their pickle in my jar free.
Ah! Chicken Tender Daddy! What's up, dude? That's a penis? Yeah, it is. Missed you. Hope all is well. The geoduck looks thick. Alright, let me get the Powell speech ready for us to watch. Mm. Alright. Well, do you think bulls pump this? Well, they might want to. Mm. Ball's getting a little spicy. We still have the morning gap to fill. There's a gap, yeah. I don't think we need to fill it. Mm. We got 7 minutes. Can someone fill me in with the Pi-Fi lore for the past year and a half? Last I checked, I was a confirmed centaur. That rumor just won't die. What happens to risk on the 8x carry trade leverage when JPOW cuts rates? I'm assuming all is good SPX to a million, but could be wrong. No, the cost to carry on the long end goes up. And the short end falls, which squeezes out the short. Well, it squeezes out the short term debt instruments, the short position on short term debt instruments, which is a thing. Like shorts where your coin purse hangs out? Yes. It would have died until you made us install a mandatory hoof cleaner at the front door of HQ. Well, what if we want to take horses to work? It's not for me. It also doubles as a boot cleaner. You'd emergency rate hike tonight? No. The Bank of Japan's not going to do shit until there's some form of centralized power in the parliament. Otherwise, they risk too much pissing off the wrong party. Would you use weeklies to play AVGO? That's what I have. I have weeklies on it. I'm near the money-ish. Just got off a 6.5 hour call. My ear hurts. Shouldn't press the phone into the top of your ear. How do a horse hoof cleaner and a centaur hoof cleaner different? That's not what's important, okay? And no, we're not opening our HQ in Montana. It's in New York City. Although I would assume that you would have wanted to take carriage rides in Central Park. Are you bullish on the end of day based on your AVGO calls? Sure. Is it better to go in the money when in longer dated options versus at the money, out of the money, shorter term? I mean, they're relative to one another. It's nice to go in the money with longer dated positions because you can sell options against those in the money contracts, which can help offset the cost to carry. What mean for higher consumer credit number later? Higher consumer credit would be bullish. If consumer credit declines further, that's not going to be good. I think JPEG's going to get peppered with questions he's not going to have great answers to. Why are rates up after you cut? Wait till inflation goes up, and then the Fed's really not doing anything at all. I know you would never just open a $666 position and diamond hand it to nothing. Yes, I would. I'll open a $666 position and then trade futures in the opposite direction and completely forget I opened the $666 position. He's not on. Oh, wait, did I not click live? Oh, he is. Motherfucker. Sneaky bitch. Showing up right on the dot. Nope. There it is.
The FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms.
He had to go
The
blow
unemployment rate
J.D.
is
Vance
invariably
to
higher
get
than
his
it was
job
a year
back,
ago,
so
but it has edged
he's a
down
little
over the past
disheveled
3 months
today.
and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
The swap market says you're lying.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
Why does he have to explain the dual mandate every fucking time?
Bringing inflation sustainably to our 2%
He doesn't have any new viewers.
and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our
something to
actions affect
say.
communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
90% of the people watching
given
this
the
speech
expectation that
accidentally
the election outcome will produce
arrived here while
policies that would
searching for
meaningfully
prawn.
impact the U.S. economy next year. How is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term.
J-Prod.
Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long bond rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things
carry shit overnight
don't really
during
have
an election
mainly to do with Fed policy, but to do with other factors in the economy.
That makes me
If I
sad.
could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
Stronger growth, not inflation.
We're halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular, and so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, I'm going to wait. We're going to wait and see how things come in December. I mean, it's just. I would put it this way: we're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September, we're just going to have to see where the data lead us. We have a whole 6 weeks of data to look at to make
They
that
cut
decision in
25
December.
points. Popcorn.
Obviously, I'm not ruling it out or in, but I would say, I would say that. Again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we net that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary
I don't know
case.
why those are
Let's
going
say
up.
Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outline, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes, and you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So we have a very large economy. Many things are affecting it at any given time. And a law change of some kind would go in there, but it would it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly, and this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, And once we know what they are, we won't have a sense of, when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order.
Did you just say this time's different? Yeah.
If I could just follow up on Nick's
completely
question.
different. How can you?
Are the current
don't you
rates
see that?
something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
Look, I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find, 3 weeks later, the 10-year was 50 basis points lower. So, it's material changes in financial conditions that last, that are persistent, that really matter. And we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market.
Yeah,
Inflation
I think we're getting
has
a
moved
little
down
bit of
great deal
repositioning
from
here.
its, higher, it's
Most of
highs
the
2
at the
years
money
ago,
positions
and we
have
judged,
fallen
as I
off,
mentioned, that
though.
it's on a sustainable path back
So,
to 2%. So the job's not
It's a
done
little
on
bit,
inflation, but if you
little
look
bit
at
like
those two
everything's
things,
moving out to
we judged
tomorrow.
in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe
And
that with an
things are
appropriate
getting,
recalibration of our policy stance, we can maintain
a little
strength in
bit
the
more
labor market,
bullish on
even as,
tomorrow's expiry.
our policy stance enables further progress toward our inflation goal.
It's not very
And just to follow
significant
up, could you-
changes yet.
what
Mostly
might
we're still
cause you
just
to
chopping
pause rate
around
cuts in
in
December?
the same
what kind of
range.
economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restrictions.
6K open tomorrow? I mean,
Again,
6K
haven't
is
made any
open
decisions
today.
about that, but that's certainly
if we
a
get the
possibility.
positioning coming
If you
in,
can think of it as similar
could
to
happen.
what we do with asset purchase, with
It's
asset runoff
difficult
with QT.
because there's
So we reach
so
a point
much
where we
shortfall,
slow the pace,
but
much
not
like
impossible
an
by
airplane
any
reaching
means.
the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think
you
if you
should
look
have
at the 3
paused.
and 6 month, you're quoting the 12 month. So we look at all of them, right? But if you look at the 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant
J-Pal's
progress.
just making shit up
And,
now? Nice.
We expect there to be bumps For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from?
Really?
It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you
So
have some
unit
time
labor
to get
costs
Nothing
doubling,
in
no big
the
deal?
Economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully. But we do see maintaining strength there.
What do we have to break to the downside
so
for a
we
drop
think
to
that
50?
the right way
For a
the
drop
right
to
way find
58.50?
neutral, if you will, is carefully, patiently.
I mean,
Again,
5,900.
that's not meant to have a specific meaning, other than to the extent that
Gamma to the
economy
downside is
remains
actually
strong, we have the
fairly
ability
flat right now.
to-
So we
to
could
take advantage
fall
of
all the
that
way back
as we
to
try
50,
to navigate that middle path
back to
between the two risks.
5,900. But there's going to be support there.
Hi, Chair Powell.
What do you have to
Craig
lose
Torres
for a
from
massive
Bloomberg.
drop today?
2 questions today. Did you learn anything
55.
about what Americans think
55,
about the
and we could
economy
test
from the
30
election
or
results?
10.
First question. Second question. I want to talk about some labor market indicators.
I don't think we're
and I
getting
do so
those.
with great respect
Doesn't
for
seem
your
to be the way
attentiveness
position
to
is moving.
the maximum employment side of the mandate, Chair Powell. So the unemployment
There are
rate
a
has
lot
been
of
at
bot
4% or
calls
higher for
at
6 months.
59.80.
One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big
Did that
change
Chad
upward in
seriously
unemployment.
cut this
Sometimes
economy?
that has meant
Yes, he
bad
did.
things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool. But it seems to be in a good place, and our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. You know, the openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, you know, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But, you know, it may be that we're now 5 years, if you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. You know, we don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria. Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Oh, Jesus.
Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are
That was fucking
dependent
priceless.
on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much a discussion topic in their world, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year's 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear. You see how cocky you got after
that answer? That was fucking priceless.
What I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
Well, to follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So
You invoked the name? No one said Volcker at a Fed meeting in like a year.
Less than what the predecessors.
You shall not be named.
Said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that. I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney. Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals
He's not untouchable.
that the president-elect has
The president
put out on the
can't
campaign trail? Tariffs,
get rid of
for
him
instance?
via
I was not
executive
referring
order.
to the new administration's policies at all, nor will I today. So what I'm just saying is, as we look ahead, we know, and I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place.
Yeah, Congress can absolutely get rid of them.
But as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with both of manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. So there's, this is a thing where we're meeting by meeting, we're going to be making our assessment of what the right path is. It's not as important, the precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is. And we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Simon.
What's the real reason you think
Chair
Powell is
Simon Minovich with
cutting?
The Economist.
I think he's cutting
I know you
in
don't want to share
order
your
to present
decomposition of
the
bond yields,
necessary
but if you look at the
dovishness,
break-evens,
and because
it
he's
is clear
operating
that
on
long-term inflation expectations do seem
incomplete
to have risen,
and
up at
unverifiable
about
employment data,
2.5%,
which
for
is
example,
why
in the
they've
5-year.
removed
That's
so
about
many
half a
of
point
their
from when
certain
you cut in September.
conditions
Do you have any concern
from their
at all
announcement.
that
Right?
longer-term inflation
So
expectations
they are now
are
unsure about
anchoring,
inflation. They are
or
less
put another
sure
way,
about the
are
labor
anchoring
market,
at a
because
slightly higher level?
the last two prints
So
of
we
labor
would
data have
be
been
concerned
fairly wild, right? We had
saw
a big outlier in
long-term
NFP, and then we have a big
expectations
outlier in
came from
ADP
a
the
higher
following
level.
month.
That's not
we
what
had,
we're still
the
seeing
Boeing
between
strikes, we
surveys and
had
market
the
readings
hurricanes, and
broadly
so the
consistent
last
with,
3 months
I looked at the 5-year, 5-year
don't really present a
earlier
lot of
today. It's
confidence. They
probably
don't
moved, but
really
it's
present
not-
a lot
it's
of
just- it's kind of right where it's
negativity
been, and
towards
also
the
it's
Fed's
pretty
goal
close to
either.
consistent with 2% PCE inflation. So
but he wants
that's the
to
one that's
present
been traditional
dovishness and bring
one that we
rates
look at a
down.
lot. But
And even
overall,
though this isn't going to
expectations
do
seem to
that,
be,
right,
and
because the
how
bond
we have
market is
throughout
not in
this,
agreement with the
in a
direction
place that's
of
consistent with 2%
inflation.
inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to.
So when in doubt,
drift
JPL will just be
upward. But
cut and be
really where
dovish.
we
He
reacted
needs
so sharply back in.
He needs rates at the
2022
long end to
was
come
avoid
down.
that.
He does. And that's a little bit inconsiderate of rates at the short end. And then if inflation rises,
we just talked about what you.
I posted about this last night in my write-up, but if inflation rises, it's the real rates that get hit. So the Fed is under the assumption that their current, and this is, their current rate is, Fed funds rate is going to drop today to about,
and it is. But we also know that people are still feeling the
like
effects of high prices, for example.
4.58.
And
off
we
of
went
today's
through,
cut.
The world went through a global inflation shock. And inflation went up everywhere.
Inflation is
it
around
stays with you because the price level doesn't come back
2.4.
So what that takes is it takes some years
This is the 12
of real
month.
wage gains for people to
And
feel
so,
better. And that's what
you know, you're looking at a real rate of 2.18. So the Fed's assuming that they have about 18 points of padding on their rate cut.
I think what needs to happen is happening.
Okay, and so, but what can happen,
but it'll be
and this is the risk that the Fed's taking by doing this in order to try to trim long-term yields, because they don't want the Treasury doesn't want to be paying out more interest. So they want rates at the short end to fall, but rates at the short end are being shorted in order to carry the bank risk at the long end. Right, and so yields at the short end have been moving up regardless of Fed policy because those bonds are being heavily shorted in order to cover the cost to carry on the rising yields at the top end of the curve. Right, and so if inflation goes up, that 18-point spread that they have deteriorates. So real rates will fall. So if inflation goes to 2.7 or 2.8, you're looking at a real rate that is not only no longer restrictive, but negative.
So we don't have to deal with it. So that is actually our plan.
Relative to the assumed long-term rate.
It's of course a very difficult thing because.
So what is a 25-point cut now?
Anything you do with interest rates will
can become a 50 or 60 or 75-point cut as CPI moves up.
That, we've been able to see inflation come down.
So because of the way the Fed models things, they're assuming that they have a lot of padding on a cut, but they don't really. Right, and the bond market doesn't think they do. The swaps market is pricing forward inflation at like 2.8% by the end of this year.
In the labor market, and
that's before any economic policies come into play from the next administration.
And that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow.
How can I send JPL Kofi and call him names?
The labor market will remain strong. If you
Our plan is not to have stagflation.
September SEP, that is our baseline.
I don't think we'll get stagflation.
Short of some event, that will continue to be our forecast for the foreseeable future. So. But ultimately,
but we don't know. I mean, what actually happens with
we're not in a world where we can
Trump's administration is out completely up in the air at this point.
There's just too much uncertainty in what we do.
All right, that's pretty awesome, Turd.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average
ADP
inflation
is a private
so
payroll
people have a
company
chance
in
to
the
catch up?
U.S. And they
No,
report
that's not the way our framework works.
report
We're
private
aiming
sector
for
payrolls
inflation at 2%. We do
as
not
part
have,
of
we
the
do not think it
monthly
would be
labor data
appropriate
drop.
to deliberately undershoot. And, you know, part of the problem there is that low inflation.
Non-farms,
can
mostly
be a
public
problem,
sector
too.
payroll. Well,
In
a chunk of
way,
it is.
But that's not part of our framework, and it's not something we're going to be looking
One
at in our
guarantee for
framework.
Trump's
Thank you
administration:
very
lots
much.
of golf, the best golf, on the most beautiful courses. You mean just at Mar-a-Lago? Trump doesn't travel. He's got a McDonald's there already, so he's pretty set. Maybe Geo's getting a little beat up by shortfall. Do I want to carry this shit overnight? Maybe I just turn it into a debit spread. Or a credit spread if it's not going to break 85. Ooh. Hmm. I do think they want to pump, though. Maybe I'll just go with the 190. Shave off the 16 cents. What fucking pending orders? Oh. It's too not bad, not too bad. Same like averaging them down to spot. And I won't eat the loss in theta by holding overnight, so that's cool. Here's the 180 test. Alright, so can we push up from here? I think we can. I think, fuck it. It wasn't bad enough, right? Yields haven't started rising yet. Dollar's down a little bit because Powell's talking about disinflation. Correlation turning around a little bit. Forward yield on vol is at -2. Getting a little bit of a drop in leverage today, though. Bond vol's down. Commodities are up pretty broadly. Hmm. Okay. Sorry, I was just moving some stuff around. Yeah, JPOW spoke. All done. Did SQQQ split yet? Reverse split was today? Ooh. Hmm. It's kind of neat. Yeah, he cut. No, we're not going to 7,500. Where's support on a dump? Here? 80? 80 support. There's actually plenty of support. The only like slip we're gonna get is if we lose 70, and we're nowhere near that. We got decent gamma at 59.90, 6,000, starting to pick up too. CrowdStrike still just killing it. EPAM up 15%. Nice. Tesla tapping. GM. That's running out of room to the upside. What's Nvidia doing? Why does it have to be rug pulled right now? So pickle jar's in bull mode. Pickle jar's been bearish the last year. If anybody's following the popular sentiment, they're usually wrong. Jam pits on everything. Okay. I mean, I don't hate it. It's not great, though. Consumer credit reports of 6 billion versus 14.5 expected. This means consumer debt increased, but not as much as expected. No. It means from last month, consumer credit demand has declined. Friendly reminder that SPX is now up 37% in 12 months. Should have just bought leaps. Okay. What's wrong with you? You can't go long? I seriously don't fucking get how you guys play the market sometimes. I think you're just like, wait till it goes up and then buy puts. Why do you expect a rug pull? Don't give away my alpha. We need to outlaw retail being able to buy puts to protect us. Just like buy calls also. Don't just buy one. That's the most bullish thing I've heard you say in the history of ever, and that's scary. I mean, I'm generally not either, to any significant degree. I expect a reversion to mean in the next couple of weeks. Yeah, but where do you think mean is? Mean's like 58.50. $3,000. You know, I give you guys like a little chart every night. You could just follow the little chart. It's not hard. I've distilled it down into four zones. Is this the 1929 line we're testing? Not yet, but we're getting close to it. You might get the opportunity to see the most leverage ever. Maybe. The 1929 line is... We're actually just a bit over it, I think. Oh no. Someone moved my chart. We're very close to it. Is SPX being irrational? It's doing exactly what I said it would do today. Maybe we can make gamma strike charting so lines don't move. No, it's just I switched from regular scale to log. That's the 1929 trend. So it's like 60-40 this week. Next week it's like 60-37 this week. Next week it's like 60-44. Then 60-51. 60-57. It's like $4 a week, $4 or $5 a week. The S&P did exist in 1929. Just had fewer stocks in it. Mm-hmm. It wasn't 13. I think it was like 200 something, and then it went to 90. Sometime in the 60s it became 500. 50, late 50s or 60s. 223. That sounds about right. Having a hard time holding above Vega neutral here. There's a little bit of profit taking on that test at 83. Sell more puts? Yeah, they might need to. How much juice does this have left in it? Even if the underlying economy was in tip-top shape, we kind of run out of money around 60-25, 60-40. Somewhere in there. Isn't that what makes her rapid rejections at VN? Selling puts? Yeah, because the MM's net long puts above VN. And so if they aggressively sell puts, the price will come down. But they can push. I mean, we've seen them push above VN into close before. It's just hard to hold it for a long time. Because the longer you try to hold prices there, the more and more the MM goes longer and longer puts. And that's problematic. Need some moves on soy and corn today. I know, I saw. What do you mean run out of money? Like, there's just no more money. Leverage, money all maxed out. There is a finite amount of money currently in existence. No, leverage is capped too. And margin requirements have only gone up over the last like 6 months. No one else is going to take on your infinite risk. What's the next banking crisis? I'm trying to profit from this one. 10-year above 4 point. Well, the 10-year above 5% can start it off. 10-year above 5.25 to 5% starts to expose like a lot of CR. Well, actually, above 4.8, you start to expose CRE risk. Above 5.5, your hold to maturity risk starts getting really bad. Above 6%, I mean, I think the only banks that can survive that right now are like Citigroup and maybe JPM. But the more banks JPM absorbs, the more exposed to that risk they become. Is there a ticker on WeBull for the 10-year? I don't know. Yeah. USYCT. Boop. I don't know if it's live or not, but it's on there. 4.335. Yeah, it seems to be up to date. What the fuck is that? Is Reddit continuing to Vegas squeeze? I think it's running out of room. Yeah, not much above 130. Strikes are open out to 180. Well, the Vana starts to fall off after 130. So it's probably not going to go much higher than it is. But, I mean, if you're shorting it, I would suggest Theta. Like a fairly decent amount of Theta. Because it could take a while to grind down. And it may spike back up again before it falls off. How do you feel about CB for Microsoft? What? Would I buy Microsoft here? Absolutely not. I'm going to Upstart put today for April. Nice. A Gamma Strike? What do you mean, does Vana show as white? Where? No? Oh, ha. That was a Wheel of Fortune joke, yeah. Awful. You should be ashamed of yourself. Fair enough. Start asking him, can you please give us a picture of OI going into tomorrow? There's a bunch of bot calls at 80 and some at 6,000. We're getting into the last 15 minutes, so we'll probably get some more positioning into tomorrow. Let me see. Yep, looks like bot calls at 80. Call wall starts at 90. Stronger at 6,000. But yeah, we could still push up that extra $20. Are you gonna straddle end of day? Yeah, maybe. But if I do, I'm going like 0 DTE on the call side. And then like fucking next Friday for the puts, probably. No puts to the downside. You're not going to get puts in above gamma neutral. Generally, you don't see bot puts when you're above gamma neutral ever. I've told you guys this rule before, but you hate following it. Intraday, you'll see puts come on and off like 0 DTE, but you're not going to see any longer dated put positions in a positive gamma environment. If you do, they'll be exceptionally large, and watch out. Maybe it's time for some NVIDIA puts. This earnings actually does hold the potential to be a bit weaker. I don't know if I'd want to short it, though. I don't like playing their fucking earnings. The last 6 earnings have just been flat, and everybody's gotten fucking destroyed on IV. 3. Last 3. Kenny's just raking in bags of cash on 20% expected moves. You think coin is now a good short, or should it first test 263? I don't think technical levels matter too much on coin, given that all of the speculation on it's just due to the price of Bitcoin. Should I short MSTR tomorrow? I kind of want to. tempting. You spent some time discussing how much of a Chad J-Pow was during the line of questioning about stepping down. J-Pow for president 2028. I mean, he's responding accurately. I'm sure he's getting that question a lot right now. Spy puts 2 or 3 months out, fairly safe, probably $10 out of the money. Okay. I don't know if you need that much theta for $10 out of the money, but sure. That could be an okay position. It's not safe. I mean, but we are getting close to where at least the SPXW chain tops out. And given that there's no interest on the monthly chain yet, the problem with that though is the monthly chain could pick up more interest, which would be exceedingly bearish. Right now, like most of the sold calls and stuff are still on the weekly chain. But if they move out, like as we get close to Gamma Max on SPXW here, frequently you'll start to see longer dated short calls come in. And that can turn around the price action pretty fast. There's also no support beneath us. We can see bullish positioning come in, but not much. I mean, there's not a lot of range there. If bullish positioning comes in, we're going to see like GM on the monthly chain pull closer to spot and the upside range narrow even further. Oh no, it fell 75. Fuck me. It'll probably bounce back. Short calls will capitulate on the drop. I don't think the names are super bearish to the downside here. Yeah, not that bad. We got profit taking on SPX at both of the highs. But 70 is still fairly supportive. Worst case, we get like a close at like maybe like 68 or something. I feel like a test of 65, we bounce back really sharply. That's way too much money. Why is that call $3? What the fuck? 34% implied vol. I guess it's about to expire, but still. Hmm. What did I buy that for? It's picking up a little. Hmm. There's sold puts at 75, bought calls at 80. Give me the 76 close. Do it. Not 68, 76. Hmm. Hmm. Ew. It was fun. Nice. Ah, it's gonna move up more. Or did I nail it? Ah, they did it. Bastards. I think it cash settled a little bit above where I sold. Where did I get stopped? I got stopped at 350. So I think they cash settled what? Oh, no. Okay, so a little bit better than if I held them to close. You set a ridiculously low buy limit on the contract? Yeah, sometimes. Alright. That was fun. Paid for my dinner. And then, let's see where we ended. So we ended the day almost, well, within $1 of the market maker's expected move for the day to the upside. And just under Vega neutral. We did break out above it briefly, but we were unable to hold. We may see Vega neutral move up a little with the short vol from yesterday largely falling off today, but it probably won't move up very much. And I suspect that Gamma Max may move closer to spot if bulls are continuing to position to the upside on short-dated contracts. Remember that a rejection in this range between Vega neutral and Gamma Max can be very sharp. This is generally where you get profit taking and on the future side. The MM starts to dump their delta hedge. And you get that cover bid kind of flowing the other way. And so you can get a large move down. I would say if we stay under VN for most of tomorrow, that we could get a fairly flat close into the end of the week. But if we move up above it, we may see like an intraday into end of day rejection. There would still be strength on the back half of this week, so technically moving forward, you know, we should expect a bullish continuation here, and we would look to the back half of next week for a potential reversal. I'm doing long mini VX December. Ooh, okay, interesting. Robert F. Kennedy Jr.'s new health roll is going to make us all super ripped. Nice, clean, beautiful, healthy food for all. Yeah, and corporations allowed to sell us poison and market it as whatever the fuck they want. That'll be great. Brainworms is totally going to do a good job. I'm sure of it. He's probably not going to be given any power at all because he's a fucking insane person. Looks like we tested the top of the trend here on ES. This is the long-term trend. It's more out here on like the 1 hour, even the daily. So this is, you know, the long-term ES trend from, you know, back in August of 2022. We tested it once in July, right before our like 10% correction. We're testing it again here. A little bit to the upside of us is that, you know, 1929 trend, not very far away from spot, that marked the top of both the roaring 20s and the top of the dot-com bubble. I don't know if that has any really big significance outside of people's perception of it, but it is kind of ironically also around the price where we run out of money to keep pumping things. So unless we start to hit bank reserves really heavily. And the only way to do that is to see a really significant amount of selling and marking to market of securities at a loss, which I don't think we're gonna see too much of until yields go higher. Overnight pullback unlikely. No, I mean we do have a little bit of a rejection here on the 1 hour. I don't think it would pull back very much. Maybe like 59.85. We have data tomorrow too. I'm pretty sure we have Michigan consumer preliminaries, which are, arguably the most important Michigan consumer print. We have a little bit of shit out of Japan tonight. I think like foreign bond investment and stock investment by foreigners, which I would expect would rise, and foreign bond investment is probably going to will also print higher. China's got their National People's Congress still ongoing. Some ECB speakers in the morning. Not too much data. But we do have Michigan consumer. And we are kind of, not sitting on a ton of support up here. But I think it's possible we push up to like the 60-25 test before failing, which would be roughly a test of 6,000 SPX. Or just a little, maybe just a little short of the SPX 6,000 test. Commodities up again today. This time kind of disregarding the falling dollar and, heavily led by precious metals. Copper up 4.5%, silver 2.66, gold 1.39. Agricultural commodities moving a little bit higher as well, so some decent moves there. And oil's up on the day, so recovered back to the 72 a barrel mark, despite a larger supply. ES, NQ up, Dow and Russell not doing much today. So, I mean, largely this move up higher is presumed to be on the back of inflation with an expectation for higher rates. We do have a little softening in yields and the dollar today. Obviously, Powell was dovish. But even in the medium term, I think we will continue to see rates push higher, regardless. And Powell's cut isn't going to have like a long-term positive effect. But yields actually falling is kind of bullish. The dollar and yields start to act as a headwind to continued upside as they represent tightening financial conditions once they reach a certain point. And so having those fall back a little, might lead to softer price action, but also open up more room to the upside for a further move later on. And yields still, relatively over the last 4 days at the same level. So not really significant changes there. Correlation continued. Well, not down really, but it's just kind of flat over the course of the day. It did have a little bit of a breakdown earlier, but not much. Leverage in the short end of the carry trade still staying just under 7x. And then the top end pulled back 0.3 roughly, about 0.2. So not too much leverage shed despite the big drop in the dollar and the bounce back in the yen. The forward yield on volatility at negative 2.44%. Something interesting there is that's not coming down steadily. That should be falling a lot faster relative to what we're seeing in the VIX. And so, I mean, there's definitely still a demand for long vol out of bond portfolios that is keeping that elevated. A drop in bond volatility, however, coinciding with the continued move down in correlation. Those are now tracking together. Skews not doing much. 60.63% of the S&P above its 20-day moving average. And correlation between VIX, cash VIX, continuing to nosedive today after bouncing back a little bit yesterday. Although I don't think we're seeing the kind of drops in correlation that we saw back when massive volatility shorting was going on. So even though we're coming down here and kind of mean reverting back to that $15 mark where this all kicked off from, it will probably be difficult for us to fall much lower than that because the expected returns on volatility over the longer time frames are still slightly higher. Fed fund futures now pricing in half a point of cuts for June of 2025. No real change there, even after the FOMC decision. And the 10 2-year moved a little bit towards inversion today, but not much. Drop back from what? Is that prior to the Fed meeting? Yeah, prior to the Fed meeting, we're around a positive 20 point spread, now positive 13. Yeah, that's about it. The finance sector got hit pretty hard today, but tech pulled ahead. We saw pullbacks in producer manufacturing, finance, consumer services, commercial services. Energy didn't do too well despite oil doing pretty well. Consumer durables and health services are up a little bit. Health technology is kind of a mixed bag. Transportation down pretty hard. Communications also, so telecom's not doing too great. But yeah, I mean, this is largely where tech can kind of continue to rise and counterbalance that gain in SPX. But SPX is probably gonna still have a hard time moving higher. We're getting really close to maxing out the amount of leverage available in the system, given the amount of money available. Thanks for this 50-70C. A debit spread 70-75, legged into a fly with a bear call for almost 3x. Nice. Which upper trend from 29 in the .com are we hitting? It's out here on the, well, you can look at it on the weekly or the monthly. There is a trend line that goes from the peak of 1929. We just tested it back in 2000 during the .com bubble. And we came kind of close to testing it again at the peak of 2021, and we're about $30 away from it right now. About $50 away from it right now. But currently, I mean, we are testing the top of the July 23 trend. So, I mean, we could fail there. These are, I mean, they're really only relevant for risk management. They're just technical levels. They don't really tell you anything about future price action. But it's good to know where the risk levels are at. Like a breakout there would be bullish, obviously. Or, at least you would use that as risk for a bullish position. Upstart moving after hours. Do they have earnings today? Yes. Fuck. I'd be careful post earnings. There's a lot of vol to short there. So yeah, NQ never got a pullback. What do you mean? Like today? Did you expect one? Kind of? Really? I don't know. I figured we would just push up into VN, into the Fed meeting, and then if it wasn't bearish, we would just stay there. Or Bulls did try to push higher. They just didn't get anywhere with it. I mean, I think as rates start to rise again, we'll probably see IWM pull back. Yeah. How long on Reddit Vegas squeeze? I mean, if you're trying to short the vol, or you're trying to short it, I would make sure that you have plenty of time. Like, it's not an invalid position or anything like that. It will likely revert back, but you're gonna want theta, because what's gonna happen, right, is as Reddit's price falls, the short call positions that are below spot and underwater are going to close. And that'll bounce the price back up, right? Up that massive ramp of Gamma and Vega. And then they'll sell calls out of the money. And this process can repeat several times before it actually falls back below GM. So, I mean, be careful with it, or just, you can wait, I mean, if you want to. It's very near its second possible top. I would say, well, I have last night's data, but, like 132, 134 is about as high as it goes before Gamma starts to fall off again. And the downside, below 128, is very steep. So I sold some 30s today. I have some 25s sold, which I rolled out a little further. I've got about 30 days on the 30s and about 40 days on the 25s. Anyway, that's about it for today. I will see you guys tomorrow for 0 DTE day. That should be fun. Later, everyone.